Hi, I am Marcus Hartkotter, and welcome to this video. In this video, you will learn the best markets to trade, how I set up my charts, the 3 best indicators for day trading, and how to easily identify the start and the end of a trend. So let's get started. You see, I've been trading for, I think it's 22 years now. And during this time, I've been trading everything. I've traded stocks and ETFs. I've been buying and selling options. I traded Forex spreads and any instrument you can imagine, I have probably traded it. But today, I'm exclusively trading futures because I like to keep things simple. I don't like to scan thousands of stocks for the best stocks to trade or use complicated models to evaluate the best option to buy or sell. You see, when trading futures, I can bring up only 5 charts and I'm very well diversified. And it's really easy to trade futures. I'll show you how. So here are the markets that I'm trading these days. I trade the E-mini S&P, the euro versus the dollar, the 30-year T-bonds, crude oil, and gold. And although you can trade all these markets as ETFs, I prefer trading them as futures markets. Since they are extremely liquid, it is easy to go long and short, and the margin requirements are really low. Now, as you can see, with these 5 markets, I'm very diversified. I'm trading a stock index, which is the E-mini S&P. I'm trading currencies, which is the euro versus the dollar. I'm trading interest rates, which are the 30-year T-bonds. And I'm trading commodities like crude oil and gold. See? It's really simple, isn't it? So let's talk about my chart setup right now. As you will see, my chart setup is different than that of most traders. And here's why. You might have heard that many traders are losing money. And if you do what most traders do and look at charts the same way as they do, you will probably lose money too. So I'm looking at charts differently, and I believe that my unique chart setup is giving me an edge in the markets. And you know that you need an edge, right? So in this video, I want to show you my unique chart setup. So let's get started. When you're displaying a chart, you have 3 different options. You can choose a time-based chart, for example, a 5-minute chart, and this means that a new bar or candle is plotted after a certain amount of time has elapsed, in this example, 5 minutes. Another possibility is to use volume-based charts, where you plot a new bar or a candle after a certain amount of trades have been taking place. So in this example, 133 trades. Now, I don't have any hard facts, but after talking to hundreds of traders at trading expos and in webinars, it seems that probably 90% of traders are either using time-based charts or volume-based charts. And as I already said, if you do what most traders do, you will probably lose money as most traders do. And that's why I like to look at charts differently. So I like to use the third, and I call it the secret way to display charts. I use volatility-based charts, which are also known as range bars. So what does this mean? Well, when using volatility-based charts, you plot a new bar or a candle after the market moves a certain amount, for example, 2 points. It's really pretty simple. So why do I use these range bars? Well, let me show you. Here are the advantages of range bars. Every bar has a fixed length, in our example, 2 points. And you only get a new bar if the market breaks out of this 2-point range. Now, this is a very powerful concept because now you can predict the open, the high, the low, and the close of a bar. Because when using range bars, you know where the high of the bar will be, since it will be exactly 2 points away from the low of the bar. And you know where the low of the bar will be, since it will be exactly 2 points away from the high of the bar. You know where the bar will close, since it can only close at the high or at the low. And you know where the next bar will open, because if the previous bar closed at the low, the next bar will open one tick below the low of the bar, and if the previous bar closed at the high, the next bar will open one tick above the high of the bar. Now if you think about it, when constructing a bar or a candle, you have four variables: the open, the high, the low, and the close. Now look at this slide again. You know where these values will be. Do you think that this could give you an edge in your trading? Well, I believe so, and later I'll show you how. But let's move on to the indicators now. You will see that I use standard indicators that you can find in any charting software, but I'm using them with a twist. I'm using these indicators differently than most other traders because, again, I want to see what other traders don't see. When trading, I want to have an edge over other traders, something like an unfair advantage when I'm trading against them. So let me show you exactly what I do. You'll see it's simple yet very powerful. So the first and most important indicator in my trading are Bollinger Bands. Bollinger Bands consist of three components. It's a center line, which is a simple moving average, and then two standard deviations, one above the center line and one below the center line. And these deviations are called the upper and lower Bollinger Band. In my trading, I don't use the center line, therefore you won't see it on my charts because I like to keep it simple. And as a setting, I use 12 for the moving average and 2 for the standard deviation. And that's another secret setting because most traders use a setting of 18, 20, or 21. And as I said earlier, I want to see what other traders don't see. I want an edge. And using a different and, based on my experience, better setting for the Bollinger Bands is giving me this edge. So let me show you my unique way to use these Bollinger Bands. Most traders use them to trade a sideways market, but not me. I am using Bollinger Bands to identify trends. You can use the upper Bollinger Band to identify an uptrend and the lower Bollinger Band to identify a downtrend. Let me show you. In an uptrend, you will see that the upper Bollinger Band is nicely pointing up in a 45-degree angle or more, and that prices are constantly touching the upper Bollinger Band. You see that the band is attracting prices like a magnet, and that's when we see a strong uptrend. So when is this uptrend over? Well, as soon as the upper Bollinger Band starts to flatten, like here. So the same is true for a downtrend. In a downtrend, you will see that the lower Bollinger Band is pointing down in a 45-degree angle or more, and prices are constantly touching the lower Bollinger Band. And the downtrend is over once the lower Bollinger Band is flattening and prices are no longer touching it, like here. It's pretty simple, isn't it? But it works. Please try it for yourself. Just plot the Bollinger Bands on your chart after we finish this video and try it out. You will be amazed. Now let's move on to the next indicator that I like to use, which is the MACD. So the MACD is the moving average convergence divergence and plotted below the chart. And I'm using the standard settings of 12, 26, and 9 for this indicator. And here's how I use it. In a downtrend, I want to see that the MACD is below the zero line and below its signal line, which here my charts is the purple line. And if these conditions are met, I color the bars on my chart red. Now, in an uptrend, I like to see that the MACD is above the signal line and above the zero line, and that's when I color the bars green. So as I mentioned before, my primary indicator are the Bollinger Bands, but I would never rely on one indicator alone. You would get too many false signals. You should always confirm your primary indicator with a second indicator. Okay, so far so good? Does this make sense to you thus far? Okay, then let's move on. So in addition to these two indicators, I like to use the RSI for confirmation. Now the RSI is the Relative Strength Index, and I use a setting of 7 bars for this indicator. And the RSI is measuring the relative strength of a trend. And here's how I use it. In a strong uptrend, you will see that the RSI moves above 70 and stays there for a while. And that's when I'm plotting the green triangles under the bars. And in a downtrend, the RSI will move below 30 and stay there for a while. And that's when I plot the red triangles on the chart. Again, I use the RSI to confirm the signals from the Bollinger Bands and the MACD. So let's summarize these very simple rules. In a strong uptrend, I want to see that first, the upper Bollinger Band is nicely pointing up and prices are touching the upper Bollinger Band. I want to see that the bars are green, meaning that the MACD is above the zero line and above its signal line. And I want to see that the RSI is above 70, meaning that I see green triangles below the bars. And as soon as the triangles disappear, or the upper Bollinger Band flattens, or the bars are turning black, then I know that the uptrend is over. And the same is true for a downtrend. In a strong downtrend, I want to see that the lower Bollinger Band is nicely pointing down and prices are touching the lower Bollinger Band. I want to see that the bars are red, meaning that the MACD is below the zero line and below its signal line. And I want to see that the RSI is below 30, meaning that I see red triangles above the bars. And as soon as either the triangles disappear or the lower Bollinger Band flattens or the bars are turning black, I know that the downtrend is over. And these principles apply to any market. I told you. It's simple yet very powerful because now you're looking at charts differently than most other traders. Well, I hope you enjoyed this, and I'm planning to shoot another video for you in the next couple of days. And in the next video, I will show you how you can use the information you learned today to determine specific entries and exits. Yep, you heard right. In the next video, I will show you a simple trading strategy that you can use in your trading right away. So just keep an eye on your inbox and I'll shoot you an email as soon as the next video is ready. And that's it for today. I'll talk to you soon. Bye.